Hello, this is the TradeSight Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday, the 14th of September 2014 and ending Friday, the 19th of September. This will be triple expiration week. That means options, futures, and commodities all expiring, futures indices and commodities all expiring this coming Friday. That does have implications for the currency market because there are futures contracts as they relate to the currencies, so that may cause a slow Friday this coming week, usually what happens on triple expiration. And then again, we had a slow Friday this week and we didn't have it, so anything's possible. Here's a look at the dollar index daily chart. You can see how flat we were this week again after a nice move up the prior week. 1, 2, 3, 4 bars, and the top of the fifth, the Monday bar, all in the same range. Here's the euro dollar, again, very narrow after dropping last week. Here's the pound, a little more volatile with everything going on as it relates to Scotland, but not too much, frankly, quite stable as compared to what you might expect. Here's the Aussie dollar, broke down under the static trend line and continues to move. Finally, a little movement on the Aussie. More movement in the last 4 days than in the last 6 months on the Aussie dollar. There's the New Zealand also heading lower as the dollar strengthens. And here's the pound yen looking like it might break out actually of this long range we've been in. Good news is across the board makes it look like we could potentially getting some action in the Forex pairs, and we do usually come out of summer a little slowly in September and then pick up speed. Didn't do it last year, but this year we might, and it's starting to look like it. Here's a look at the euro dollar for the week, and unfortunately back to 120 pips of range from high to low for the whole week. We opened flat on Sunday and then just traded mostly straight sideways. Remember, the euro dollar historically trades 130 pips per day on average. And of course, that doesn't mean that you get that times 5 for the week, but even if you get 300 pips or so, that would be more like normal. We're not seeing that right now. Here's the pound dollar. 30-minute bars here shows us that we trade about 220 pips. That's better than normal. That's because, or better than we've been seeing, still close to average at best. That's what we do to the volatility over there from the situation, the vote that's coming up. But most of this was not particularly stellar in terms of the price action, as you can see. Even the Wednesday, which was sort of the upward day, didn't really give us a clean trigger. There was a cup from Monday to Wednesday that broke out, didn't go far. Thursday and Friday all flat. So I wouldn't say anything super impressive here on the pound, just based on this chart. We'll look at the Aussie real quick. And it did have a little more range than the rest. Actually traded 300, almost 400 pips of range on the Aussie. That's not bad. All right, so what do we have coming up for this week? Like I said, the triple expiration, but let's look at all the economic data that's due out. Sunday, we've got the right move HPI out of the UK. Japan's got a bank holiday, so they're closed. New motor vehicle sales out of Australia. Monday, the PPI out of Switzerland, trade balance out of Europe, capacity utilization, industrial production here in the U.S. before the stock market opens. A bunch of junk, a little minor junk after that. Going into Tuesday, CPI and PPI and RPI, all of it out of the UK at 4:30 a.m. Eastern Time Tuesday morning. We've got zoo economic sentiment out of the European sector, manufacturing sales out of Canada in the morning, PPI here in the U.S., tick long-term purchases here in the U.S. New Zealand's current account, we've got the MI leading index out of Australia. Wednesday, Italian trade balance, unemployment rate out of the UK, Switzerland's zoo economic sentiment. By the way, that's 2 days in a row with big data out of the UK at 4:30 a.m. One day with all the inflation gauge stuff, one day with the employment stuff. So keep an eye on that. CPI, that's one of our big three here in the US at 8:30 a.m. Eastern Time Wednesday. Along with that, we get a housing market index, crude oil inventories, and a Fed announcement. So we have a 2-day Fed meeting this week. We know that slows the market down. Good news is the CPI comes out the same day, so we're going to be less than half size that night ahead of both. We're not tying up 2 days with that junk. So that announcement's at 2 in the afternoon on Wednesday. New Zealand's GDP in the evening. Trade balance in Japan. RBA bulletin out of Australia. Then we go into Thursday. Trade balance out of Switzerland. We've got the LIBOR rate out of Switzerland. Retail sales out of the UK. Canada's foreign security purchases, building permits out of the U.S., unemployment claims out of the U.S., housing starts out of the U.S., Fed Chair Yellen speaks. We got the Philly Fed number. We got natty gas. Then that night, New Zealand visitor arrivals and credit card spending heading into Friday. All industries activity, German PPI, current account out of Europe, core CPI out of Canada and wholesale sales, CB leading index out of the US, elections in New Zealand, the G20 meetings start next weekend, and like I said, triple expiration. So the things to focus on are obviously probably a flat night ahead of the CPI and the Fed announcement for Wednesday, probably a flat session on Friday for triple expiration. We'll see what we can squeeze in between that. Nothing new to report technically on the charts at this point, other than the dollar still looks stronger than weaker, and that's good. And hopefully we're going to start to expand these ranges. We'll get back to full size. As usual, I'd like to thank eSignal for the charts. If you like this video, please like us on YouTube. It helps us out, and we hope you have a great trading week. We will be in the lab making calls in the Forex market as usual.